Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
You know, some of the biggest, most respected companies in the world are facing a really serious challenge in the US market. And what's wild is it's not coming from a competitor, it's coming from their own accounting departments. Today, we're going to break down a hidden hurdle that's putting some of Japan's top companies to the test. All right, so what's the deal here? What's the mystery we're really digging into today? It all boils down to how some seemingly tiny differences in accounting rules can create these massive problems for huge multinational corporations. And it impacts everything, from their financial statements all the way to their global credibility. Well, it's got a name. People are calling it the GAAP Gap. And look, this is way more than just some boring technical problem for the accountants. It's a major business threat. We're talking about a material risk that could lead to serious regulatory penalties and really shake investor confidence. So you gotta ask, how did we even get here? Why is this all blowing up right now? Let's dig into the core reasons behind this challenge. It really comes down to a clash of systems, a serious shortage of talent, and some very, very specific rule changes. Okay, first things first, we gotta understand the rule book that's at the heart of this whole story, US GAAP. Think of it as the official financial language of business in the United States. If you want to operate and be taken seriously in the US market, you absolutely 100% have to speak it fluently. And this is where it gets really interesting, because it shows a deep, fundamental split in how you even think about accounting. The Japanese standard, J-GAAP, it tends to be more conservative. It values things at what they originally cost. US GAAP, though, is much more dynamic. It forces you to reevaluate your assets at their current fair value, and it demands way more detailed reporting. So it's not just a different language, it's a completely different philosophy on what value even is. All right, so the first big cause, it's a huge talent shortage. I mean, there just aren't enough people with the right skills to go around. And this isn't only a problem for Japanese firms. It's a much wider issue that's hitting the entire US accounting industry. And get this, the number is pretty shocking. We're talking a 33% drop in people even trying to get their certified public accountant license in just 5 years. The whole pipeline of new talent is drying up, and that makes it harder for every single company to find the qualified accountants they need. And for Japanese companies operating in the US, the problem gets so much worse. They're not just looking for an accounting expert, they're basically hunting for a unicorn. Somebody who deeply understands complex US rules, but also speaks fluent Japanese and gets the unique business culture of a Japanese parent company. I mean, finding that person is incredibly rare. Okay, so you see the ingredients for a problem. Now let's look at how this all blows up in the real world. A single recent rule change has pretty much exposed all the cracks in the system, and it's causing a major headache for finance teams. So here's the deal. For a long time under the Japanese rules, a lot of leases, for an office or for equipment, they were just treated like a monthly bill, kept off the main books, the balance sheet. But this new US rule, ASC 842, comes along and says, nope, not anymore. Now, almost every single lease has to be listed as both an asset and a liability. And that fundamentally changes how a company's financial health looks on paper. And you better believe the regulators are watching this like hawks. The SEC, the Securities and Exchange Commission, is actively sending out these official comment letters. They're basically notes telling companies in no uncertain terms that their reporting isn't up to snuff and that they need to fix it, often in a very, very specific way. So what happens? All this pressure forces companies into this defensive posture. They're not planning ahead, they're just constantly putting out fires, hiring really expensive consultants to clean up messes, and all the while, they're living with the high risk of getting it wrong all over again. All right, let's talk about the real cost of doing nothing, the sheer burden of it all. Because what's happening here is that these companies are essentially forced to run two completely different sets of books at the same time. And that, as you can imagine, is just incredibly inefficient. I mean, just look at the difference. Under the Japanese system, a transaction can be pretty straightforward. You record an expense. Simple. But to make that same transaction compliant for the US, suddenly you're doing all these extra super complex calculations and judgments. The workload can easily double or even triple for the same event.
And listen, this isn't just theory. We have a real-world example from the massive financial group MUFG. They're part of Mitsubishi. They actually said that getting their US reports done took almost as much work as their entire home country Japanese filings. Just think about that. That is a staggering amount of duplicated effort.
Okay, so we've seen the problem, we know the causes, and we've seen just how painful the consequences can be. The stakes are super high. So what's the solution? How do these companies actually go about bridging this dangerous gap? Well, any real long-term fix has to hit all these issues at once, right? You've got to tackle the business culture that prefers keeping things simple and off the books. You have to deal with old, outdated computer systems that just weren't built for this kind of complexity. And you somehow, some way, have to solve that massive talent shortage we talked about earlier. It really seems like the only way forward is a big, strategic investment on 3 fronts. You've got to build up your own people with top-notch training. You absolutely have to overhaul your IT systems to handle this dual reporting. And maybe most importantly, you need a big cultural shift so that speaking US GAAP becomes a core business skill, not just some afterthought you dump on the finance department. So here's the bottom line. For these big Japanese multinationals that really want to thrive and win in the US market, this has totally moved beyond being a simple accounting problem. It is now a fundamental test of their entire global business strategy. Getting this right is absolutely imperative for their future success. And that really leaves us with a bigger question, doesn't it? This whole story is about more than just one country's companies struggling with another country's rules. It really makes you wonder, in this crazy interconnected global economy that we live in, could it be that learning to speak the right financial language is the ultimate hidden competitive advantage?